Hey guys, thanks for clicking on this video. Today we are looking at AMD Advanced Micro Devices, ticker symbol AMD, and seeing if it is still a buy in 2021. So the current price of AMD is $106.15 a share, and this stock has been an absolute powerhouse over the last few years. In 2017, it was $10 a share, 18 it was still $10 a share, and then that's when the run-up started. In 2019, it was almost doubled to $20 a share. 2020 doubled again to 47, and then this year it's doubled almost again to $106 a share. So when I was first looking at the stock around about 2019, 2020, that was when I started buying it, and I wish I bought a lot more at that price point. So let's have a quick look at my steps. So firstly, we want to look at firstly, it's got a market cap of 128 billion. It doesn't pay a dividend, and it's in the technology sector, but more specifically, it's in the semiconductor stock space. Number one is the PE ratio less than the market. It currently has a PE ratio of 37.24, so that is a pass. Is it lower than the sector? It has a sector that's about the same as the market, 40.5, and definitely lower than its competitors, such as Nvidia, which has over I believe a 50 or 60 PE ratio, which is very, very high. Now we want to look at some of the on the income, and is the revenue increasing? Yes, it's doubled from 6 billion to 13 billion, so that is excellent to see. Then we want to look at the profit. So it went from 300 million in the profit to over $3.4 billion. So that is excellent. It is a very profitable company right now. So please give a like on the video for that. Now we want to look at the shares outstanding, and the shares outstanding are actually a fail. It's gone from, I need to change the order of these. It actually went from 900 million to 1.1 billion shares that are on the market. So if we just have a look at why this is bad, this is AMD's shares outstanding, and you can see this is the graph showing AMD shares from 2006 to now, and you can see they have been steadily increasing, especially more so now that the stock price has gone up. I mean, they were going flat for quite a few years from 2010 to 2016, and then has doubled in the last, not doubled, almost, it's going to double in the next couple of years. So they have been diluting their shareholders. So that is a big negative. If we look at a different company here, this is Microsoft. Now, obviously, Microsoft is in a very different place in its company, in its sort of growth as a company compared to AMD. But you can see they have been consistently buying back their shares from 2006. Almost bought back 50% of their shares, gone from 10 billion to 7 billion. And if we just go to Nvidia as well, they have had periods where there's been massive share buybacks, then they've issued more shares, buybacks, and issued more shares. So Nvidia over the last couple of years has been flat, but you can see they do fluctuate quite differently. So AMD, compared to other ones, has aggressively been issuing more shares, which dilutes the shareholders. That is a negative. And the free cash flow has gone from minus 129 million to 2.465 billion. So that is a massive increase, negative to positive, and positive in a hell of a way as well. And you can see that gives an average free cash flow ratio of 50, which is pretty darn high, but still these companies are very big growth companies. So now we want to have a look at my valuations for AMD. And you can see here that we have discounted free cash flow. We've calculated the future free cash flows. We've got some analyst estimates in here, and we're thinking that the analyst estimates are correct and that AMD will continue growing on their free cash flow. So what is the free cash flow ratio of, what is the calculated stock price for AMD on the free cash flow side? Well, actually that has a calculated stock price of $77.69 a share, which means it is actually 26% overvalued. Now the reason for this is because of that high PE ratio. AMD is definitely more of a speculative play, and it's hard to get a discounted free cash flow model for these very growth hyped up stocks where the price is a lot higher. But interestingly, if we look at the Buffett-Graham intrinsic value, you can see this stock has an expected growth rate of 16.4%. So that means that it is valued at, has a fair value, of $117.29 and a Graham price of around about $90. So if this stock went to $90, it's an absolute no-brainer buy. But according to the Buffett-Graham intrinsic value, it is still undervalued in the short term. So definitely buy the stock if you like the Buffett-Graham intrinsic value. So that has a fair value of around about $120 a share, and with the current price at 106, that says it's trading at about a 10% discount and still has more room to grow in the short term based off the current expected growth rate. Right, guys, thanks for watching the video. Please give it a like if you enjoyed it. Consider subscribing if you're not already, and I'll catch you guys next time.